Assalamualaikum. My name is Arif Afidin Shafi'i. I will be share a little company background and comparison of two famous Malaysian fashion brands, which is Padini and Bonia. Let's start with a little history. Padini was founded in 1971 by Yong Pang Chang, while Bonia was founded in 1974 by Chiang Sang-sen. Both companies start in Malaysia and have grown into well-known names in the fashion industry. Now, look at what they offer for the customer. Padini focus on clothes and fashion. Accessories include casual wear and formal wear for everyday use. On the other hand, Bonia is more into luxury leather products like handbags, wallet, shoes, watch, and perfume. In terms of industry, Padini is a part of the fashion retail and manufacturing sector, while Bonia is under fashion and luxury goods. With both brands have expanded internationally. Padini serves countries like Brunei, Thailand, Saudi Arabia, Egypt, Oman, Cambodia, and Indonesia, while Bonia has a wide reach include Singapore, China, Taiwan, Japan, and Vietnam, and more. In short, Padini is known for its affordable fashion and Bonia stands out for its premium luxury items, even though they focus on different markets. Both are strong Malaysian brands with international success. To make it simple, Padini is all about everyday fashion, while Bonia focus on luxury fashion. Let me share what Padini and Bonia do for their core activities. Padini more to everyday fashion, like clothes, shoes, and accessories. They run stores like Padini Concept Store and Brands Outlet, BO. Some of their brands are PDI for casual wear, Vinci for women shoes and bags. For the next is for Bonia. Bonia is more about luxury fashion. They have a boutiques across Asia and offer stylish leather goods. For their brands include Brambufel for luxury leather bags. And then for the next is Bonia for affordable handbags and shoes. And third is Carlo Reno, is a trendy fashion for a young people. So, for the simple comparison, Padini is a fashion for a daily wear and Bonia for the fashion with style and class. For next, I will explain 4 important financial ratios. For the first, leverage ratio. This ratio shows how a company cost affect its profits when sales change. It helps us understand the risk of the company expense. Secondly, liquidity ratio. This tells us if the company can pay its short-term debts using cash or assets that can quickly be turned into a cash. Thirdly, efficiency ratio. This shows how well the company uses its asset to make a sales. Last but not least, profit ratio. This measures how good the company is make a profit from its sales, assets, and investment. In short, this ratio helps to see how the efficient and profit of the company is. Thank you.
Hi, my name is Putri alias Shazana Medina Hisham. So my metric number is 2025513391. So I will explain about liquidity ratio. So I just two kind of formula, which is CR, which is the current ratio, and then the second one is net working capital. So the first one is current ratio. In 2020, the current ratio stood at 4.0 times, so it indicates a healthy ability to cover short-term liability. So this actually improved significantly in 2021. It reached 5.39 times and then decreased to 3.62 times in 2022, 4.47 times in 2023, and finally 4.38 times in 2024. So while remaining above the ideal ratio of 1, its actually decline suggests a gradual decrease in Padini short-term liquidity. Alright, the next one, the current ratio for the Bonia. So we look one by one. From 2020, it is stated at 2.79 times and it's increasing to 2.89 times in the year 2021. So for the year 2022, it is 2.76, which is decreased from 2021. And then it increased back from 2022, which is 2.79 in 2023. And the last one, it is already increased, which is 3.10 times in 2024. Now we compare Padini and Bonia in the year 2020. So for Padini 4.0 and Bonia 2.79 means that Padini show a great current ratio, demonstrating its ability to meet debts and excellent short-term liquidity. So while Bonia actually talk about its capacity to pay off short-term debt. In the year 2021, Padini is 5.39 times and Bonia is 2.89, means that its ability to meet and have high short-term liquidity. So while Bonia actually behind with a current ratio, indicating a relatively reduced ability to pay down short-term debt. For the year 2022, Padini 3.92 while Bonia 2.76. So Padini had a high ability to fulfill short-term obligation. And then 2023, Padini and Bonia, Padini show a good capacity to fulfill a short-term obligation with current ratio 4.47. And Bonia, on the other hand, actually had ratio of 2.79, indicating a more poor and position in terms of meeting short-term debt obligation. And the last one for the year 2024, Padini 4.38 times and Bonia 3.10 times. It showed that Padini showed a high ability to meet short-term obligation with current ratio of 4.38, while Bonia indicating a relatively poor ability to pay down short-term debt. For the second formula for Padini, which is net working capital, so we can look one by one from 2020. It is stated that RM 575.4, it is increased to 652 in 2021, and the increase until 2024, which is RM 912. This means that year by year, the net working capital is increasing. Next for Bonia, net working capital for 2020, 161, and then it's decrease, and then increase, until 2024. So, for 2020, we compare the Padini and Bonia. So, Padini maintained a healthy liquidity. And 2021, Padini also had a strong liquidity position. For 2022, Padini continued its strong trend. And for 2023, Padini net working also improved. And then it's strengthening its capacity to finance daily operations. And then the last one for 2024, Padini rise again. It showcasing strong financial management.
Assalamualaikum, my name is Nur Umairah binti Ahmad. My metric number is 2025128723, and I choose efficiency ratio, which is inventory turnover and total asset turnover. Next is efficiency. We use inventory turnover and total asset turnover. For year 2020, the inventory turnover is 2.98 times, and for 2021, it decreased. In 2022, it goes up until 5.91 times. For 2023, it decreased again and went up again at 2024. Next is efficiency for Bonia. For 2020, the inventory turnover is 1.62 times, and for 2021 and 2022, it increased throughout 2 years. For 2023, it goes down again and up again at 2024. Vertical analysis for inventory turnover. From 2020 to 2024, Padini's reflect more effective inventory management compared to Bonia. It shows that Padini is better at converting inventory into sales, whereas Bonia may be experiencing slower inventory movement and weaker demand. We move on to total asset turnover for Padini. For 2020, the total asset turnover is 0.96 times. So for 2021, it goes decrease. For 2022 until 2023, the total asset turnover is increase. Lastly, for 2023 to 2024, it shows that the total asset turnover is decrease. Next is total asset turnover for Bonia. For year 2020, the total asset turnover is 0.61 times. For 2021, it shows that the total asset turnover is 0.44 times, which shows that the total asset turnover is decreased. For 2022 to 2023, it went up from 0.51 times to 0.61 times. Lastly, for 2023 to 2024, it went drop again from 0.61 times to 0.57 times. And lastly, vertical analysis for total asset turnover. As we can see here, Padini is over than Bonia. Bonia's total asset turnover is substantially lower than Padini. It shows that Bonia generates less revenue per unit of assets employed than Padini. This difference highlights a disparity in asset utilization efficiency between these two companies. This consistent difference highlights the need for Bonia to improve its asset management strategy.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Fatina Dira binti Muhammad Syukri and my metric number is 2025100839. So today I'm going to presenting about leverage ratio. Leverage ratio for Padini. So we have been choosing time interest earned. In year 2020, time interest earned were 8.79 times. In 2021, increased to 50.69 times. In 2020, decreased to 11.68 times. In 2023, increased to 50.65 times. While in 2024, decreased to 9.30 times. Leverage ratio for 1 year, time interest earned. In 2022, it was 3.50 times. While in 2021, it was 6.27 times. In 2022, it was 12.12 times, while in 2023, it was 30.57 times. and last for 2024 increased to 40.99 times. In 2020, Padini showed a strong time interest earn ratio of 8.79 times, meaning it could pay its interest over 5 times. This showed Padini had a good profit to cover its debt. Bonia, with lower ratio of 3.50%, could still pay its interest but had less ability compared to Padini. Next, in 2021, Padini had a very strong time interest earn ratio, which is 50.69 times, showing it made high earn ratio profit and could easily pay its interest. Bonia had a ratio of 6.27 times, which also good but still lower than Padini. In 2022, Bonia had a higher time interest earn ratio than Padini. Both companies could pay their interest earn many times, showing strong ability to pay debt, but Bonia was slightly better than Padini. In 2023, both Padini and Bonia had a strong ability to pay interest. Padini had a higher ratio, showing better profit to cover its debt compared to Bonia. And last but not least, in 2024, Bonia had a higher time ratio interest earn, this time rather than Padini. This when Bonia had a stronger profit to pay its interest. Debt to equity ratio in 2020 it was 30.88%. In 2021 decreased to 24.87%. In 2022 decreased to 21.25%. In 2023 increased to 22.02%, and 2024 increased to 24.06%. Debt to equity ratio in 2020 it was 50.36%. In 2021 increased to 70.76%. In 2022 decreased to 70.42%. And 2023 decreased again to 70.30%. In 2024 decreased to 70.78%. So the first one in 2020, Padini had a higher debt to equity ratio of 30.88%, meaning it used more debt to finance its business compared to Bonia. Bonia lower ratio of 30.36%, showing it relied less on debt and had a more conservative financial position. Overall, Padini took more financial risks while Bonia maintained a safer capital structure. Next, in 2021, Padini reduced its debt reliance, lowering the ratio to 24.87%. Bonia ratio increased to 70.76%, but still had less debt than Padini. In 2022, Padini reduced again its debt level significantly, showing a shift towards a more conservative financial position. Bonia's ratio increased slightly but remained lower than Padini's, continuing its low-risk approach. While in 2023, both companies maintained similar position. Padini ratio rose slightly but remained lower than 2020. Bonia stayed consistent, continuing its conservative financial strategy. And last, in 2024, Padini ratio increased slightly but still below than 2020 levels. Bonia remained consistent and continued using less debt.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Najira Hisham and my metric number is 2025162297. I choose profitability ratio and the formula is net profit margin and gross profit margin.
Okay, so for profitability, we choose two, which is JPM and MPM. For JPM, it's sales minus cost of goods sold and divide with sales and times with 100. Okay, so for 2021, it decreased compared with 2020. But for 2022 and 2023, it increased. And for 2024, it decreased again. Okay, so for Bonia company, in 2021, it decreased compared with 2020. And for 2022 and 2023, it decreased from 57.8 to 61.15. But for 2024, it decreased again. Next, it is a vertical analysis between two companies, Padini and Bonia in 2020 and 2021. So for each year, Bonia is higher than Padini. It same goes for 2022 and 2023, which is Bonia still higher than Padini. For 2024, still same, which is Bonia outperformed compared with Padini. And for Bonia, 16.79 and for Padini, 36.22. Next profit is net profit margin, and net profit after tax will be divided with sales and times 100. Okay, so for 2021, it dropped compared with 2020, but in 2022 until 2023, it increased, and for 2024, it's back to decrease. But compared with Bonia, they have a good performance because in 2020 until 2023, they have a lot of increasement, but they dropped in 2024. Next, I will continue with vertical analysis for net profit margin. And for 2020, Padini
outperformed compared with Bonia, but in 2021, Bonia is higher than Padini. Okay, so both in 2022 and 2023, Bonia have a good achievement in margin, and they still higher compared with Padini. And last for 2024, Bonia still have a stronger financial performance than Padini during that year.